Well, let's get to our first conversation this afternoon. Nigeria's foreign exchange reserves rose to $41 billion. That's on August 19, 2025, the highest level in 44 months. This is according to figures published by the Central Bank of Nigeria on its website. The current level marks the highest level recorded since December 3rd, 2021. This shows steady external accretion witnessed in recent weeks. The new trajectory comes after months of gradual depletion and volatility, largely attributed to intense pressure from external debt repayment. The reserves have staged a strong rally in August, adding about $1.46 billion month to date and from $39.54 billion on 1st August to $41 billion by August 19. This represents a 3.69% growth in less than 3 weeks. The momentum has been broadly consistent across trading days with only marginal pauses. My guest is Dr. Yusha'u Aliyu. He is Fellowship Doctorate Institute of Professional Economist and Policy Management, Abuja. He joins me live from our Abuja studios. Good afternoon. It's good to see you today. Thank you so much for your time.
Thank you. Good afternoon.
Yes. I think it's another good news. Just yesterday, we were still celebrating above $40 billion. And I see that before the end of yesterday, another report from the Apex Bank showed that it has moved to $41 billion. What is playing out? There's this jump with regards to our external reserves in recent times.
It has to do with the friendly policies of the Central Bank of Nigeria. Remember, the bank is ambitious to assist to have a $1 trillion economy. And in having a $1 trillion economy, monetary policy has to play a great role. And not only the monetary policy has to play a great role, foreign exchange management has to also be considered exponentially. The truth of the matter is that once you are able to attain basic needs of your foreign exchange, then what is going to be coming to the economy is stability, and stability. And this stability is associated with many factors that has to do with the effort of the bank. Remember, the unified exchange rate, which has been introduced by the bank, is still the result. And also the inflow of capital from different angles because of the performance of the stock exchange is also helping. And this performance of the stock exchange has to do with the reality on ground with regard to the interest rate, which is always attracting portfolio capitals from different dimensions, including diaspora remittance. These are very good development, and if we consistently are recording this type of development, then we will say that we are on a way to have a better economy where more investment is expected and also more performance to the GDP is also expected.
Brilliant stuff. But I would follow up with the fact that you will agree with me that we still have more of FPIs. And that is where my next question will come to you, that when do you think, assessing the situation on ground, when do you think that Nigeria as a country will start to attract FDIs, which are more stable than the hot monies that mostly come in, running our stock market, getting profits, and they run out almost immediately, particularly at this time where we have dependable kind of reserves? More of hot monies will be coming in, but we need more of stability, FDIs. When do you think that Nigeria will start to attract the needed FDIs in country?
Recently, this development, you see, this development from the central bank come at a time when president is busy calling FDI in Japan. The Africa country, the international conference that is hosted by Japan is attracting such kind of collaborations, partnership, and engagement. And these are the things that will qualify more inflow of foreign direct investment. Not only that, there are structural requirements from the economy. That's the environment itself. That is, so long as you are building confidence of investors by providing adequate security, by providing more of financial guarantees, by promising also more tax-friendly policies. This is going to be attracting much FDIs, but what we are hoping, we will the time frame at which we have more concerned investment will be after the effective period of our tax policies, and then measuring those tax policies, which is going to be effective next year by January, and probably if you put at least 6 months beyond the line, that is when these FDIs will mature and will begin to flow, because the maturity period of consistency in providing the right technical initiative from the bank, technical initiative from the financial sectors, and also technical engagement by different sectors of the economy, not just merely federal government, but other sectors of the economy. As we discuss now, you know, there has been a lot of agitation for investment in energy. And this investment in energy, Japan has capacity, Russia has capacity. Other Western civilized investors also have specialities, including the Germans, that's the Siemens. So when you conglomerate all this engagement into the economy, then rightfully we can say that in the next 1 year, we are hoping to have maturity that will translate to more jobs, that will translate to greater GDP, that will also translate to more financial stability in the economy.
Now that we have this stability in foreign reserves, which is part of what the CBN will consider when they're having their MPC meeting, we also have a bit of year-on-year decline in inflation, not month-on-month. You know what I'm talking about. Do you think that we are getting to that point where we might start to consider a shift for an inflation, talking about from monetary policy, I beg your pardon? Because even in the United States, everyone is expecting that the Federal Reserves might have a push very soon, considering what Donald Trump has been saying to Mr. Jerome Powell with regards to interest rates in the United States. Do you think that the CBN might start to consider shifting their ground, maybe at the next meeting or the final meeting for the year? We have 2 more meetings to go this year, September and November.
The central bank has already made a shift, and that shift is yielding results. And we have discussed some time back in Business Nigeria that this inflation will continue to decline because of not just merely the intervention of the bank, but because of the push from the certain critical sectors of the economy. If you check food inflation that always record higher, if you check year on year, it's now lower than ever. So when you begin to have lower inflation with regard to what we produce in the economy, then if we are to build capacity, we are also expecting better policies that are domestic in nature, and also considering the fact that Nigeria has so much engagement with BRICS economy. And that BRICS economy is very significant, looking at the situation that even the Ukraine-Russia is about to be stable without war. And if that happens, then definitely it will add to our own production capacity, which will further reduce inflation. But however, the central bank has pushed the MPR before, but we are happy in the 301 MPC meeting, it has held the MPR at 27.5, which is significant, and which we have said also the bank has to sustain this credibility and also sustain the tempo, and also other aspects of the economy which will also assist in stabilizing prices, which has to do with the supply bottlenecks and also the output that is coming from the from the agricultural sector to have the enough supply in the market, which will help to stabilize the market. But notwithstanding, what probably unconventionally that has assisted this inflation, in food inflation, has to do with also government policy on waivers on certain critical food items which are critical in the economy. You know, in the last discussion in Business Nigeria, we have discussed that if you are to make consumer confidence and to build purchasing power, inflation has to be reducing. And if it is reducing, not just merely monetary policy is going to make that happen, but also certain strategic agricultural policies as well as trade policies can also enhance the situation.
I agree with you, and I remember we had that conversation. But now we know that President Bola Tinubu has been, let me say, the chief marketing officer of Nigeria, moving from here, there, moving all around, you know, telling business leaders that Nigeria is opened for business. But I want to ask you, what do you think with regards to our trade policies, with regards to our foreign affairs policies? Because these are things that would also help attract the needed investment. All of these people, yes, fine, the reserves are looking pretty good. The investors will look at it and say, yeah, but they will also look at our trade and our industrial policies. Do you think we are also set to attract the needed investment also with that?
Of course, yes. You know the potential of Nigerian economy. The potentials are so great and the ambition is also great. The best ambition ever is to try and look at an economy that has been incapacitated to build it to $1 trillion economy. Many people don't know what that $1 trillion economy is, but emphatically, in economic sense, once you have a banking sector that has been recapitalized, it means that any investor who is attempting to invest in any sector in the economy, the critical sectors of the economy has to do with energy, has to do with agriculture, has to do with oil and gas. And these are good avenues that investors are looking worldwide. But where are the policies? It is now that the policies are being designed. And that is why we begin to record what we are seeing from the management of foreign exchange. But however, in my opinion, what is most significant in trying to build an economy that will have what is called collective prosperity. Collective prosperity has to do with whatever investment that is making and the benefit that is coming out of it, and then also the consumers and their benefit. Because the consumers' benefit will be more emphatic when consumers begin to have surpluses. And it is out of that they begin to save. And by saving, it will add to the financial market, and that financial market will bounce it back to the same economy. So whoever that is trying to invest, either directly or indirectly, you know, the foreign portfolios, in the main sense, we have to look at, as you rightly pointed out, the foreign policy. We have the World Trade Organization president being a Nigerian, and she has wider experience in the management of domestic economy as well as international economy. So these are the kind of people that are needed in trying to build capacity. Not only that, in our foreign policy and trade, we also have to significantly look at the agreement that we have signed within the same sub-region, that's the ECOWAS. And we also look at the agreement under Africa Continental Free Trade Area, which are all to build and then expand businesses among Africans themselves. But if we are to put that, we need to put the right capacity in our production lines, because whatever that is going to be traded has to be produced, and whatever that is going to be produced has to be produced with a cost, and whoever is invested with a cost is looking for profit, and this profit, it has to be sustained. And if it is being sustained, that is when the advantage that we begin to record in our own foreign reserve will also be sustained. And if it is sustained, the next thing is to bring it back, to build that capacity into the economy, and then to reduce certain diseconomies which is affecting major consumers in the economy. We record this kind of progress within this period, then what we need to do is to build that capacity to sustain. If you can have at least a shift between 1,004 and 1,500, is going to add value to the local consumers, because the consumers who are building this economy, looking at the size of the GDP, has to do with their own purchasing power. And in purchasing power, at every point, at every interval, the price at which consumers consume various products has to also be developing. And developing not just merely to the interest of FDIs, interest of portfolios, but also interest of domestic savings. Domestic savings will have to be given a very serious concern, especially in this a period of stability, so that we sustain the stability and we now sustain also the exchange rate capability of our domestic currency.
That's a very good one, but let's see how all of this plays out moving forward. I think it's been an interesting conversation, Dr. Aliyu. Let's see how all of this plays out as we move towards the next meeting, and of course projections towards the end of the year. But let me ask you to give your outlook for the entire economy, the larger economy. This is August almost coming to an end. We are past mid-August. What's your projection for the end of the year? We've seen a GDP that looks pretty well, good, but towards the end of the year, what are you thinking?
I'm thinking to have a value added to whatever policy measures the central bank is operating, especially the liquidity aspect, where we are expecting more entrepreneurs to be participating in the financial market. I am also expecting inflation to continue to go down relatively, and not only going down. I am expecting, because of the high resources that is going to the 3 tiers of government, I am expecting investment in critical infrastructure that will provide additional security, that will also clear much of the bottlenecks in terms of bringing resources that are produced from agriculture into various markets in different corners of our economy.
Dr. Yusha'u Aliyu is a fellowship, or a doctorate fellowship at the Institute of Professional Economists and Policy Management in Abuja. Thank you so much. Have a great weekend. Enjoy the rest of your day.
Thank you very much. Thank you. Thank you.
All right, then.